Hi, hello everyone. Thank you for joining us today. Hope you're all doing safe and well. To kick things off, we're going to discuss some of the big ideas that we believe are driving growth in the space economy and how we're thinking about them as seed investors. I'm Chad Anderson, and I'm joined by my fellow managing partner here at Space Capital, Tom Ingersoll. We have a lot to cover in a short amount of time, so let's jump right in. Although a nascent market 10 years ago, investments have now completed a full cycle from venture to exit. Our proprietary data shows that with another $4.5 billion invested into 77 space companies in Q1, there's now been $187 billion of equity investment into 1,500 unique space companies over the last 10 years. Coming off a massive year of investment in the space economy, the trend towards larger late-stage deals continued in Q1, with the top 10 rounds accounting for 77% of total investment in the quarter. At the early stage, we're seeing larger deal sizes at higher valuations and looser terms, as VCs push to deploy the historical amounts of capital they raised in 2020. This data is based upon insights from the GPS Playbook, a report we published with Silicon Valley Bank last year. It provides us with a framework for understanding how space-based technology has become a platform for innovation on a global scale. Specifically, the development of technology layers on top of space-based infrastructure and the distribution of data for mass adoption, which unlocks thousands of unique applications. As the greatest space technology success story, GPS has generated trillions of dollars in economic value and some of the largest venture outcomes in history. We believe that GPS provides us with a playbook for how space-based technologies will create new investment opportunities, and that geospatial intelligence and satellite communications have similar growth potential to GPS. We are investing to unlock that value. To further stimulate growth in these areas, we've launched Space Talent, a free career platform and central resources hub built for the global ecosystem of companies at the intersection of space and tech. With 15,000 current jobs and 590 companies, Space Talent matches credible employers with top talent while providing insights into an ever-expanding range of opportunities. We're now receiving 29,000 unique visits and 48,000 job clicks per month. We've recently launched the Space Talent Spotlight, where so far 8 CEOs have shared their career advice. We also launched a report called Talent in Post-COVID World, which highlights unemployment trends and employment trends throughout the pandemic. Importantly, the platform also helps founders experiment, build, and finance new businesses by providing resources to build and the opportunity to receive funding from Space Capital. We've already had 5 pre-seed first check opportunities come from this platform. We're also considering allocating a small part of our fund to these pre-seed opportunities for option at seed stage. Despite wide expectations of investor pullback in the first half of last year, VCs invested another $16 billion into 250 space companies in 2020. While many expected infrastructure to be the hardest hit by the pandemic, 2020 turned out to be a record year for investment in this layer of the stack, with $9 billion invested, driven primarily by SpaceX, Blue Origin, and OneWeb. Investors liquidated $38 billion of value in 43 exits in 2020, accounting for 16% of the total value liquidated in the space economy over the last 10 years. Given the continued bull market, 2021 is off to a frenzied start as companies race to exit. Investors liquidated $7 billion of value in 14 space company exits in Q1, and more exits are on the way with 8 space company SPACs announced so far this year, representing an aggregate $16 billion of equity value. Expected to close in Q2, these transactions will add $3 billion of new cash to the target companies' balance sheets. These companies vary significantly in terms of quality and risk. Most are highly speculative from a public markets perspective. Many are pre-IPO and some pre-revenue. But there are a few with significant revenue and strong fundamentals to support their billion-dollar valuations. This all bodes well for public market investors who until now have been forced to watch the growth of the space economy from the sidelines. While we're happy to see SPACs offer access to additional capital for infrastructure companies, we're also cautious that these valuations and growth targets may be out of reach for companies that don't have a defensible data angle. Cathie Wood's new ETF is already on track to be one of the most successful fund launches ever, with inflows exceeding $445 million in the first 4 days. The ETF includes a few big aerospace and defense contractors, the infrastructure companies that most people associate with space. But the largest holding of the ETF is Trimble, a distribution company that brought us the first commercial GPS receivers in 1984. The portfolio also includes holdings that left outsiders struggling to see the space connection. But ARC's investments have significant alignment with our thesis at Space Capital, which recognize space-based technologies as the invisible backbone that power our global economy. GPS, geospatial intelligence, and satellite communications play a critical role in most major industries, from agriculture and logistics to retail, marketing, and finance. Our favorite pick of the ARC X ETF is Deere & Company. Tractors have been utilizing space tech to drive autonomously for decades, and ag tech has been an early adopter of satellite imagery to enable precision farming. In fact, we've made 2 investments here already. Regrow, data fusion that combines agronomy and scenario planning with monitoring, reporting, and verification for farmers, a co-investment we made with M12, and Arbol, a parametric weather and climate insurance marketplace. As we like to say, in the same way that every company today is a technology company, every company of tomorrow will be a space company. Now, Tom's going to walk us through the rise of the mega constellations.
Great, thank you, Chad. So the second big trend we're seeing is the rise of mega constellations. When I got involved in Skybox back in 2010, we were contemplating a constellation of 24 imaging satellites, which at the time was a constellation, a large one. But since then, systems like OneWeb with hundreds of satellites and Starlink with not only thousands, but potentially tens of thousands of satellites are being deployed. So mega constellations are here, and they're here to stay, and there's many trends that are coming from that. I think the one thing to really highlight here is that as the world becomes less flat, global markets and global problems are going to require global intelligence. And there is no better way to get an understanding of the planet than through satellites. So satellite data is going to enable us to understand, address, and solve the most pressing challenges, but also take advantage of the greatest opportunities of our time. Constellations are here to stay. You know, what has enabled that, all of that, and really is the confluence of some very important technologies. One is the commoditization of satellite components. There was a time when a production run for a reaction wheel was 20 reaction wheels. Well, now there's 20,000 reaction wheels required for some of these constellations. So it's a whole different phenomenon that's occurring. The other thing that's happening is the dramatic drop in launch costs. It was just a few years ago when people were comfortable and happy to pay only $20,000 a kilogram for a launch. But now prices have dropped to well below $5,000 per kilogram. And that is here to stay, and those prices are going to continue to drop. And the other really important technology has been the cloud and all of the data processing that enables. As gigabytes and petabytes of data per day flow from these satellites, you need powerful tools to be able to process all of that. And that really has been able to demonstrate and bring to pass Moore's Law in space. People have been talking about that for literally decades, hoping to take advantage of it. But that actually has occurred now. Again, seeing tens of thousands of communication satellites. There are now hundreds of imaging satellites. The cost of launch is plummeting. But I think also as part of that is a number of factories are being built to support the build of these constellations. You've got Telespacio building a factory now to support Black Sky. OneWeb is being built by factories built by Airbus and others. So there's a tremendous amount of infrastructure also being put in place. For those factories to stay full, prices are going to continue to drop, commoditization is continue, and those mega constellations will continue to grow. So really, what does that enable? And I think when you think about these constellations, the first one that we know most about and hear most about are satellite communications with Starlink and Kuiper and OneWeb and others. You've got Iridium, who's been around for a while. That's going to provide global ubiquitous connectivity, really internet everywhere. And that is going to allow service opportunities, not only hardware opportunities, but service opportunities that change the business model. So if you look at SpaceX, for example, their market cap is closing in on $100 billion. Probably 60 to 70% of that is based on the service opportunity, Starlink, that comes from that capability. And that's the change that's occurring. These constellations are not only hardware heavy and providing opportunity for the hardware side, but it's the service business that is really driving value and value creation. So we're going to see service businesses that evolve around communications. We're also going to see it from imaging and other technologies. Global, as we mentioned, satellite communications and those capabilities are here. Global imaging, and sensing is also expanding. We know planets got hundreds of satellites if you count the doves, but there are many systems like Black Sky and others. But there's a whole host of new constellations coming that involve not only optical, but infrared sensing, radar satellites. We've got ICEYE and Capella and others. We're going to see hyperspectral satellites that are going to look at a broad range of signals. And I think the new trend that I'm watching is what I'm calling signal fusion, where you're going to have satellites that aren't necessarily looking at just optical or just radar or just hyperspectral, but are going to have a suite of sensors to be able to combine all of the different signals that are required to be able to extract information. Again, very key for us to understand this unique viewpoint. And I think the other point I want to mention, a little bit off topic, but I hope everybody's watching the James Webb Space Telescope and what's happening there. That's launching ideally sometime next year, 2022. That's going to be an order of magnitude shift in our understanding of science and the cosmos. You think about what the Hubble Space Telescope did for science. The JWST is going to take it to a whole nother level. And I think there's all kinds of changes coming to our understanding of the cosmos and what we can do in space and about space coming from that. Again, an important trend to watch. And the technologies then that are coming from all that catalyze so many opportunities for us as seed stage investors. I will tell you, I am so excited about all that we see coming, and just the excitement and the energy and the innovation that we're able to understand, see, and learn about at this stage of investing. Most of you know about Leo Labs, which is doing space traffic control. What a massive problem that's out there. Launch Space recently put out an article saying that over 50,000 new satellites will be launched the next few years. Without a space traffic management problem, there will be chaos. Recently, a Starlink satellite came within 60 meters of a OneWeb satellite. A collision in space causes all kinds of collateral space effects with lots of debris that is going to cause more damage. So it's a significant problem. We're getting involved in that. Ubiquitous space communications is going to allow Wi-Fi everywhere on the planet. We're investing in companies that are going to be able to take advantage of that and bring that to new applications in underserved areas. We see very significant opportunities coming, not only in those areas, but in space traffic management. Climate monitoring is a very significant new field. Not only is there a lot of regulation, a lot of excitement about it, but the technology is enabling that. Forest management, wildfire management, and I would say a host of other applications that are enabled through signal fusion and processing of the data. I think the last one that we find really interesting is asset tracking. We've invested in a company called Totem Labs that is going to be able to track FedEx envelopes, and to that with a high degree of accuracy. Really unprecedented information that's coming to us. So we're excited about this significant trend of mega constellations. So next, Chad's going to talk about precise positioning and the next generation of mapping, which we see as another very significant trend that we're tracking. Chad?
Big tech staked their claim on mapping infrastructure, but opportunities are available in next-gen platforms. Google Maps and the iPhone helped turn GPS data into the foundation of the trillion-dollar industry that spawned Uber, Yelp, and Snap. Now, more precise, more secure GPS is coming online and converging with computer vision. It's ushering in a new era of precise positioning that will unlock millions of new applications never before possible. One prediction from our GPS playbook is that computer vision will augment GPS, providing unprecedented precision, enabling mass adoption of augmented reality experiences as we mesh the physical environment with digital information. After Google launched location-enabled products, mobile maps quickly became the consumer standard. Today, these use cases are powered by four main components of the modern mapping stack: data, maps, visualization, and analytics. This led to a burgeoning need for highly precise location data, recommendations, and routing, which is one of the reasons why Google acquired Waze for over $1 billion, granting them access to the movements of nearly 50 million users. While crowdsourcing started to change the fabric of how consumers interact with places, giving rise to companies like Foursquare and Yelp, at the same time, there was a surging demand for better quality data in places beyond urban metropolitan areas. There to meet the need was OpenStreetMap and the movement's volunteer mappers. Each month, hundreds of millions of users interact with OSM services through a growing number of private sector companies. This influx of capital has also led to a shift in the discourse about participation in the OSM community, more specifically focusing on the motivations for why members contribute map data and the resulting data quality. It's important to note that the profile of profile editors has been changing from volunteers to corporates, which has implications for influence. As the data becomes more valuable and is used for an ever-increasing list of projects, the integrity of the information has to be better, almost perfect. The world of mapping has changed dramatically over the past 20 years, and we can now clearly see how these technical innovations laid the groundwork for future use cases and product development. Although the mapping space is often segmented into categories such as enterprise data or transportation management, next-gen mapping will be part of the media and information services industries, with vertical ties to AR, mobility, mobility first, and SaaS. This is mostly due to map data collection evolving from static to real-time updates, which has enabled maps to power the next wave of social connection through location gaming and experiential advertising. Geofencing is a location-based service that organizations use to engage customers with highly precise targeted advertising. These promotional materials are mostly placed on mobile devices and triggered when an authorized device enters or exits a specific area. In addition to advertising, geofencing is also used for tracking vehicles in the shipping industry or micromobility. The rising demand for location-based services and the increasing penetration of mobile are expected to support the growth of the geofencing market. Demand increasing from retail for proximity-based promotion and marketing will also accelerate the market growth to nearly $2 billion by 2024. Snap and Facebook are investing heavily in AR because they believe that this technology will fuel the next wave of advertiser spending and represents the next transformational shift in personal computing. GPS struggles with location determination in dense urban environments, but it's also inefficient at identifying device orientation, which makes it challenging to know which direction to go. As a step forward, teams at Google are experimenting with visual positioning system, a new approach to location that leverages machine learning and camera technology to identify the location, orientation of the device, and subsequently the user. Investing in VPS offers Google two additional competitive advantages: a passive source of data collection and IP from data and algorithms perspective. Mobile games like Pokemon Go, Jurassic World Alive, and Harry Potter have generated more than $4 billion in revenue since 2016. This new type of immersive experience offers consumers a novel way to interact with characters, storylines, and one another. As the boundaries between gaming, media, and mapping blur, analysts project the global location-based entertainment market will grow at a CAGR of 32% through 2025. In addition to the games themselves, the underlying tools within gaming have evolved. Unity is best known for their game development platform, but their ad platform enables access to over 2 billion devices and serves more than 23 million impressions per month. After filing to go public in 2020, we learned that 30% of their revenue comes from advertising. While Unity competes with other game makers, their product lines demonstrate the convergence between game development, 3D content creation, location data, and advertising. Fundamentally, maps are the UI solution to a data and a search problem. Technical innovations and community movements have made it possible for maps to evolve to real-time data collection. Improvements in hardware and cloud compute made maps and location easier to integrate into web and mobile applications. Since then, advances in GPU-accelerated development have made it possible to model 3D environments at scale and have also allowed real-time processing of spatial data. The next wave of innovation and the future of next-gen mapping will reside at the intersection of mobile, AR, wearables, advances in camera technology, computer vision algorithms, and simulation. And as a result, we are focusing our attention on those themes. As mentioned earlier, as point of interest data becomes more valuable and is used for an ever-increasing list of projects, the integrity of the information has to be better, almost perfect. But the quality of data, particularly outside the US and other mature economies, is appalling. There is a real willingness to pay for accurate data. Where we're going is omnipresent POI data. Dataplorer is the only accurate small business database for growing economies. In our first foray into augmented reality, Camera IQ is starting with the consumer, since that's where the market currently is. But their plan is to move from there to things and then to places. The latter is what we're most excited about and where their approach aligns with our thesis. Places encompasses contextual AR experiences driven by location and maps. This is where AR and space technologies converge and where we are working with Camera IQ on how to best pursue this strategy in this area, linking GPS with AR experiences. And now I'm going to turn it over to Tom to talk about the fourth big trend, geospatial intelligence, the great unbundling.
Thank you, Chad. So as we look at the GPS playbook and the model that other models that can apply, we definitely see the geospatial intelligence sector as one that applies directly. There is technical innovation that's applying and coming forth in so many different areas. It's driving unbundling of the industry that is causing so much disruption that we see value coming in this area to a great degree. What is driving the change? It really is the fact that there is so much data that's available to help us understand what's happening around our planet, on our planet, and to our planet from geospatial intelligence systems. Historically, the industry has been selling imagery, and it's just too difficult for people to consume. It was the kind of thing that the governments could consume, but industry was just struggled with the complexity of that data. So now the industry is moving from selling imagery to selling information. And they're selling what we call activity-based monitoring. We're selling information that highlights change. It's selling alerts. It's selling notifications of change. So it's activities that are important. And these data sets are tremendously powerful and large. You're getting petabytes of data a day, in some cases even more. So there's tremendous development in technology that's required to support that, not only the gathering and the processing of it, but the storage and the distribution. And all that technology is coming together. That innovation, to a large degree, is being driven now by big tech. They're jumping on board to provide a lot of the infrastructure that's required to make the geospatial intelligence industry come together and driving some of the great unbundling. Microsoft now wants to take on Amazon and connecting satellites to the cloud. All of them are providing cloud services now that support the satellite industry, again, because of the tremendous amount of data that's required to capture, to store, to process, and then to distribute. And without this kind of infrastructure that Microsoft is putting in place, it really wouldn't be possible. But with it, it's not only making it possible, but enabling whole new level of innovation and some very exciting opportunities in seed stage investment. Some of those key technologies that we see and that we're following are listed here. AI/ML is almost a buzzword, but again, very important that in order to extract the information from these images, you need to do that through machine learning and processing. Edge processing is important because that allows some of that processing to be done where the data is being captured. So instead of having to transport and transmit all of this data from the satellites down to the ground, you can actually do it on the spacecraft and become much more efficient in processing that data. Sensor signal fusion is another key piece of it. We talked about sensor fusion previously, where you have different kinds of sensors looking at different modalities and different kinds of signals on the ground. That's important, but also all of that data typically needs to be fused with a lot of terrestrial data. So data that is looking at the weather applications, for example, you need to have not only the satellite data, but you need to have terrestrial wind velocity direction data. You need to have inversion, the data about the inversion layer within the atmosphere, and you need density, pressure information, et cetera. So all of that becomes data, needs to get fused to make that important, and being able to do that efficiently is key. Another critical technology we're looking at is synthetic data. So the trick to synthetic data is you need data to be able to train your machine learning algorithms. And if you don't have the data to cover all the edge cases, you can end up with instances where the real world hits you and causes accidents. The image on the right is a Tesla running into a semi who was in an accident and laid down horizontally. That was not part of the training data. The Tesla models did not understand that that was a hazard. It wasn't in there. You have to be able to fully extract and capture those different real world cases to make your imagery smart, to make your image processing algorithms smart. Digital globe, Maxar called synthetic data the new gold for Earth observation. It's going to be critical to be able to train these train algorithms to be able to extract data like the image on the left to know different kinds of cars. Is it a car? Is it a truck? What kind of car it is? What's that car doing? Is there motion, et cetera? So there's so much that's required to be able to extract all the information. We see synthetic data as a real key opportunity in that area. All of these really pull together to create new markets and new channels to get access to those markets. So we see the channel side as well as important. So there's really three business models that are out competing, but also working together that we're tracking. There's the traditional vertical model. Those companies like Maxar, Planet, Airbus, they design, they build, they fly, they operate satellites, they capture that imagery. They also try and do analytics on that imagery. They try and sell activity-based monitoring to various verticals and various clients. Very difficult to do. I spent a number of years of my career building, launching optical satellites. That is a significant drain on capital. It's a drain on resources. It's one of those things that has to work, and it just takes management mind share. So being able to do all of the rest of the piece of that of the stack is very challenging, and we'll see if they can succeed, but it's very hard to do. People on the analytics side, on the right side of this slide, you've got companies like Descartes Labs, Orbital Insights, others that are trying to take the existing satellite imagery and extract value from it on the information side. Again, their challenge is that they are competing with their suppliers. They're trying to extract value from data that's being provided by Planet, Maxar, Airbus. And so they're in competition with their providers. That is going to give them a significant disadvantage to succeed in the marketplace. Yes, they might have unique insight into niche verticals. At that point, they could be successful, but we think it's going to be difficult for them to be successful across the board. Where we see some really interesting opportunities is in the data aggregation and distribution of GeoInt data. Skywalks is a company we've talked quite a bit about, you're going to hear about today, but they're a platform where they're able to aggregate all of these different kinds of data sources that come in. Again, this sensor fusion that I talked about. They can gather data from optical image providers, from radar image providers, from hyperspectral image providers, from aircraft data, from stratospheric balloon data, et cetera, and pull all that together, aggregate that to be able to do some analytics, but also a distribution platform so that a customer who wants information based on multiple sources can get it from one particular source. They are additive to both sides of this slide. They're additive to the vertical players in that they create more demand for their imagery. They're also additive to the analytics because they provide them a broader source of data. So we think that the aggregation distribution portion of this, companies like Skywatch have great promise for success.
And to leave you with a summary thought, we are actively negotiating with firms in each of these areas, synthetic data, climate tech, and we hope to have some news for you in the next couple of weeks. Despite the pandemic, growth across the space economy continues to accelerate. As the global economy embraces remote operations, the most innovative companies have leveraged space technology to create a competitive edge. And in times of uncertainty, business leaders are hungry for insights and information, which is exactly the type of data that space companies provide. In fact, many of our portfolio companies have seen an increase in demand for their products and services due to the pandemic and the current economic environment. And we expect the space economy to play an increasingly important role in a post-COVID world. Thanks everyone for your time and attention today. We look forward to meeting with you later.
Thank you, everybody.